Stat testing and a lot of strategy refinement has been the primary focus in the Frame Funds office this week. Let's jump straight into 5 biggest developments for the week. First thing was China's GDP. It grew at 6.3% versus expectations of 7.1%. It was an increase from 4.5% from the prior month. However, far below market expectations. And you can see the markets were somewhat disappointed with this, where copper has sold off over the course of the week, and Chinese and Hong Kong equities have experienced a lot of volatility after the data was released. US core retail sales grew 0.2% in June. Again, it just shows that there is still some resiliency in the consumer. Out of the US, it's the 3rd consecutive positive month of growth in core retail sales. However, it has showed that it is slowing down ever so slightly. The one big thing is that we can see is that consumers are still spending, but they are spending at a much slower rate than they were. So we can somewhat imply that the interest rate increases are slowly starting to be felt through all parts of the market. New Zealand had their CPI quarter on quarter. It came in at 1.1% for the second quarter. Again, beat market expectations of 0.9%, but it is starting to slowly reduce. However, the annual figure is still very sticky at 6%, so it still provides a lot of flexibility for the RBNZ for them to continue to increase interest rates in the coming months as well. UK CPI year on year fell down to 7.9%. A few months ago, there was actually tracking above 10%. So we have actually seen a rate of deflation over the last few months. Expectations were for a year on year increase of 8.2%. So it came in below that. Once again, it just demonstrates that the increases in interest rates that have been happening over the last 6 to 12 months are slowly working their way through the economy, especially in the UK. Price stability in petroleum products were the largest contributor to the decline from 8.7% the prior month. Australian unemployment surprised most people on Thursday. We saw a very large number ahead of expectations, 33.6 thousand new jobs created. This was far above expectations of 15.4 thousand. This drove the AUD USD higher by around about 1% because it was a beat and it was a surprise beat. Again, we are in Australia, it's a little bit different to the UK and New Zealand, where unemployment rate is still very subdued, down to 3.5%, but it does give the RBA still more flexibility to look at increasing interest rates because there is so much room in the employment market still. You can see here, this is a chart from FinViz. Some of these markets we do trade in our multi-strategy hedge fund, but you can see over the course of the week, the VIX was up strongly after the weak Chinese data. A lot of this performance happened last night though, when the NASDAQ was down around about 2.2%. A lot of that was coming in from poor reports out of Netflix and Tesla. Some of the other leading movers over the last week, wheat, oats, corn. Again, they have been oscillating and moving higher and lower really aggressively over the last few weeks, as you would have seen over our last weekly updates. This week, there was a tug of war between production, weather, but then also Russia came out and stated that they are ceasing the deal with Ukraine to use the Black Sea as a terminal and a passage and to complete export across the Black Sea. So this essentially drove wheat higher over the last 3 to 4 days. Copper declined marginally, ever so marginally. You can see down here only 1.59% it dropped, and a lot of that performance did happen after the data came out of China. The Australian share market week on week has had a very good period. CBA, NAB, Westpac, Macquarie and ANZ all jumping up in excess of 3.5%. BHP down over the course of the week, again, in relation to that Chinese data. Rio, Fortescue, again, up, but not as much as the financials. So you can see that a lot of the heavy lifting over the course of the week has come in from the financials. Healthcare, CSL continues to underperform, ResMed as well, but tech, because of that very strong week that we have had from the NASDAQ, has been one of the sectors that have been leading the market higher. Xero up 6%, Square or Block up 8.61%, and WiseTech up around about 6% as well. You can see here on the Frame Funds Trend Barometer, we are still seeing an elevated period of short and longer term trends being hit. This is very interesting, and some of the commentary surrounding this, and you'll see up here where we're discussing about the changes over the course of the week from a selection of futures in the universe. It's very interesting because if we do get a soft landing, generally that is not deflationary to commodity markets, it's actually inflationary, which somewhat we are starting to see here in the 1 week relative outperformance over the course of the week. Other than that, if you have any questions about any of the information in this weekly update, or if you would like to get some analysis on your portfolio from a systematic and a quantitative perspective, please send it through to admin@framefunds.com.au. Other than that,